Good morning from Chicago traders. It's 8:01 a.m. Chicago time on Tuesday, the 30th of March, 2021. This is episode number 1962. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm going to start out by letting you know about an event that's taking place tomorrow. Dr. Brett Steenbarger and I will be hosted by Futures IO on a panel named What You Want to Know But Are Afraid to Ask About Trading and Trading Psychology. You can join by uh, copy pasting the link I put into chat on YouTube or by going to ft71.com/FIO March 2021 to join up. Please join us. Please register today. Let's hop right in. Let's hop right into our pre-market summary sheet by Convergent Trading. The market is taking on some fundamental products taking on a pretty bearish position here. Crude and gold have been tumbling, although crude is still within yesterday's full session range. Silver is the laggard today, down 70 cents, trading at 24.07, down 2.83%. Crude flirting with the $60 price mark, trading at 60.22, down $1.34, 2.18%. This is May crude. Gold, which has rolled to June today, is trading at 1683.9, $1,683.90 an ounce, down $30.70 or 1.79%. The Nasdaq's off 82 points, 0.64%. And then the leader today is the DAX. The DAX is up 88 points or 0.59. The Euro stocks are up 16 points or 0.42. The dollar index is up 30 cents, trading at 93.24. Everything else is down, including the Bund and the 10-year note and the bonds. The bonds are off 10 ticks. The 10-year note's off 10.5 big ticks. The Bund is off 67 ticks. So kind of an interesting setup here. The S&P has traded 209,000 contracts so far. A little more than what's shown here because this is published at 10 minutes before the hour. And what is a double distribution profile with the low volume node in the overnight session holding at yesterday's low volume node in the 39.52 area. We'll look at that in a minute. Inventory about 79% short, and the range 26 points. Hopefully you're hearing me nice and clear this morning. So that's where we stand. We do have some numbers coming out. Case Shiller. We do have Fed quarrels at 9 as well. Consumer confidence at 10. Fed's Bostic at noon, and then the API crude oil stock change at 4:30. So that's where we stand this morning. Again, slight risk off. Same thing as yesterday. A market that has that ran up during the day. Not yesterday, but the yesterday market that ran up during the day and then has sold off in the overnight session. Let's switch over and look at what was expected from yesterday's Trader Bite. Let's maximize the screen for clarity. The primary scenario is an expectation that we would push close to the 50 mark, to the 39.50 mark, and then I expected it to fail through and start pushing towards 34. Remember this 34 figure right here, push towards 34, and I expected it to continue before a bounce at the end of the day. The secondary is a slip lower that then gets an impulse higher and then squeezes to the prior week's close. So expected to run from about 38 or so to 64. Here's what actually happened yesterday. We got a day where we had basically both scenarios. Here's the push early, went to 60. It was a bit of a drive actually on the open. Went to 60, then started falling off, and then once it got through the mid here, pulls back to mid, continues lower. Didn't catch that. But what it did is it stopped right at the single prints at the top of these single prints, which was 60.75 on the dot. The other side of the single prints was 34 and a quarter. That's where I get the 34 from. And the expectation is it's actually down here, 34 and a quarter. So this is the string of singles that were left behind on Friday. And it went to 60.75 on nose and then pushed down into that 34 area, putting in low in just below 34. Right down here in the 31 area, consolidates. From here, it looked to me like it was just, this became a massive zipper, very, very big consolidation. And it looked to me like it was just not getting any traction in either direction. It actually looked like we were going into a holiday or something. Just consolidated very tight into the European close. And then as soon as the European markets closed, it breaks to the upside, breaks through the mid, breaks through yesterday's open, breaks through VWAP, and then pulls back to form a nice little setup here. Nice little consolidation with a fair amount of action below to lean against. This is what I mean right here, is what I mean when I've said for the last 12 years that I've been online. You want to trade against an area that makes it hard for them to get your stop. This is what I mean. A nice little volume cluster or zipper, and then take the break of this, and then it just takes off. Actually, the break was not clear to me until 49, and then from 49 we were looking for 64. For 64 and a quarter, the prior day's close right there, and it just it was a nice little run up the middle of the day for a long, and it continued to 70 and a quarter, pulled back almost to the session to the RTH mid before retesting on the close, higher high on the close, consolidating into the close, leaving us with a double distribution profile with a low volume node right at the mid VWAP of 39.52. 39.52. So, a couple prices to remember: 39.34, 39.64, and 52. Okay? So that's what we carry into today's session. Again, as we did on Friday, we got the 62-point move on falling delta. There's no reason this delta would be falling like this under normal circumstances. And here we are, we've pushed to the above the high of Friday, breaching Friday's high, breaching the weekly high, and consolidating up here. And what is it doing? The delta is just sinking. This to me portends or is telling me that there's not much lifting on the way up. There's not as much lifting as we would expect. It seems like as the prices go up, that there's some long liquidation going on or something. Somebody's hitting the bid much more so than lifting the offer, which means that as the price is moving higher, somebody is actually selling into crossing the market. They're crossing the market, hitting the bid, selling into that liquidity on the way up. This is what this is telling me. What their reason is, whether it's a hedge against long positions elsewhere, whether it's options hedging, whether I don't know. All I know is price and delta are not um, price and delta are not going in the same direction. When we see price move up, we'd expect aggressors to be lifting the offer. Price can go up on very little volume with sellers moving their offers higher. In other words, pulling their offers and moving them higher, and so on and so forth. Um, and so that's where that stands. So we have a double distribution profile. These are the key characteristics: 34, 64, key prices up here, and 52 are the key prices that we take away, and the delta being negative is another thing we take away. So what we're doing is we're rising in the day session, we are falling and balancing out in the extended trading hours again and again and again. We've done this several times. So if we look at this chart, we see these rallies, then it bounces out, comes back to the key distribution below, and then we come into the open, we buy. Same thing, of course, happened here. Strong rally, sell off, rally, and then, of course, this morning sell off. There are some examples of this in the past, quite a few examples of this in the past. Not sure what it means. I don't want to speculate on what it means. It doesn't really matter, but it's just something to observe. So that brings us into today. Today, we're looking at this profile. Let's zoom in. This is, of course, yesterday's day session. Everything in the gray is extended trading hours. This is a pit. This is pit. This is extended. This is ETH. Okay. And what we've done is we opened up, test higher, sell off, consolidate, and then we continue to sell off after the numbers in Germany. From Germany, we sell off and we formed a double distribution profile. Where's the neckline? 52. Remember that from yesterday? And then we have the 64 up here. The high is 68. And then we still have the 34 below. We stopped at 42.50. This looks to me like it's flagging, bear flagging. It looks like it's got some more in it. This is a pretty weak low so far. The delta is flat-ish to slightly negative, which is what we would expect. But overall, this looks like it has moved into yesterday's lower distribution. So chances are better that it's likely to continue lower than for it to turn up. The inventory, as I said earlier, was about 78, 79%. Let me see what it is. 79% short, and that's what we're coming into. So what does it look like on the big picture? So let's pull up our composite. So remember last week, we finished off with a lower high, but more importantly, lower low. Yesterday, we challenged last week's high. We did not get to the all-time high of 73.50. We started out from the middle of Friday. We moved away from the 25, the acceptance price of the 25, and we pushed higher. This is fairly bullish. Yesterday's action is quite bullish because what we did is we opened somewhere above the mid of the prior day. We tested down. We didn't even get to the most traded price before we turn around and finished higher. This is quite bullish. This I expected to continue to squeeze overnight. I expect it to come in today with new all-time highs, to roll into new all-time highs. But what it's done is it's fallen off. And what this does is it sets up a secondary test of yesterday's range. If that low holds yesterday, then the shorts are likely to get squeezed again, and we would expect to finally get to that 73.50 from a higher low today. That's what we're looking at. The delta is still moving lower as price moves up. Delta is moving lower. There's more hitting the bid than lifting the offer as we climb. And what this pattern shows here is like I don't know what you would call this. It's almost like a cup and handle pattern. It's supposed to be something like this, this. This is the IBD pattern. And then you take the break of that peak for a run. But that's basically what we have here, except it's more of a V bottom. But we've tested down. We see clear excesses down here. We've run up. We've petered out, pulled back, lower high, lower low, but then we're coming back to this high, and this makes it tough to hold shorts up here, in my opinion. So we've broken this pattern down here, and we're forming a new channel going this way. So to me, it's just I can't imagine that someone who's holding short, a large position short, is sitting comfortable currently. Okay, so that's that. Let's take a look. I want to remind everyone that there's an event tomorrow involving myself and Dr. Brett Steenbarger, the author, trader, professor. We will be on Futures IO. The topic is what you want to know but are afraid to ask. You can ask whatever about trading, trading psychology, the business of trading, and so on and so forth. You can join by going to ft71.com/FIO March 2021. If you're on YouTube, the top of the chat has information. Also, if you're on YouTube, the description of the video has a link and has all the information in there. So if you click on the description of the video, you'll find the link for tomorrow's event. This is occurring at 4:30 Eastern tomorrow for about an hour to an hour and a half. Hopefully, you'll sign up today. Let's move on to what's expected for today. Brought to you by my brokerage firm, Edge Clear. Let me set up these charts. Stock zones, and here we go. Okay, so what are we looking for here? What is going on here? Okay, so what are we looking for? Today, pretty straightforward. We've got decent resistance right here at these lows, the 55 area. We've got also decent resistance in the 52 area. That's a low volume node from the prior day. So this zone right here, I'm going to draw this in. My keyboard's not responding very well. 1 second. One second. There we go. So I'm going to throw this up here. This is I would hate this. I'd love to say it's a line in the sand, but it's not a line. So what we have here is 52 to 54 as a very clean and clear area to test the buyers with. If they clear this area, then you're looking at the overnight point of control, a quick run up to 39.60. If they test and fail, then you're looking at it most likely returning to the low, getting down into 41 at least. So as we come into today, the expectation is an open auction. It's opening in range, an open auction that pushes into 52, struggles up here. I'm looking for a rounded top. I'm looking for it to fail. I'm looking for an impulse down once it gives up, tests and gives up, to move into the overnight low here, into the 41 area, and back into this 34. Again, 34, right? And we want to remind you of the 64 up here before it consolidates and starts to shift back up. And I'm expecting it to finish somewhere in the middle. And I expect it to form some sort of balance in this 50 area. So I'm looking for this to happen as a test of below, and this forms a base for the rest of the week. Remember, Friday, by the way, Friday's Good Friday. The markets are closed on Friday, but we're still getting the non-farm payroll and the unemployment release. The markets close at the cash open. They close at 8:15 or 8:30 Central Time on Friday. Again, the markets are closed on Friday, but they will be open for non-farm payroll. They will be open for non-farm payroll. So this is something to note. So a key figure is coming out on Friday. The secondary is an open that immediately tests lower, is unable, comes back into this 52.54 area, breaks 52.54, gets back into 60, consolidates here for a while. Remember, this is yesterday's point of control and the overnight point of control. And then I'm looking for 64 to be tested again on the secondary scenario and a potential push higher. The next key area up beyond the all-time high 73.50, 75.50. There's a measured move up here. These are the two key scenarios of the day. Okay, so that's where we stand this morning. Anyway, watch your 34, 64, 52, 54 key areas. 52, 54 is going to be a very early tell as to how strong the buyers are, and then you can take it from there. If they fail to push through 52, 54 and lift very well, then a short has a pretty good opportunity back into the range, back into this 45 area from 52, 54. If they break through, then you're looking at 60, 64 as key targets. Hang in there. Follow your plan, mind your risk. Good luck, and please don't forget to sign up for tomorrow's event with myself and Dr. Brett Steenbarger to talk about what you want to know about trading but are afraid to ask. Good luck.